It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, April the 7th, 2016. Another exciting newsletter ready for you guys tonight. We got crude, S&P, gold, and of course the euro. Markets went on a wild ride in today's session with the oil and equity markets giving back almost half their gains from the last 2 days. And the metals and currencies looking a bit punch drunk going into Friday's session. Get a big opportunity. No major news on the counter tomorrow. Get a big opportunity here. Could be another wild ride. Boy, we love being day traders. This is a day traders market, the year 2016. Crude oil is bearish with a short-term correction this evening, which tells us the bears are likely selling into this move, and the buyers will need to hold the next pullback if they want to keep this price from retesting the lows from yesterday. The E-mini S&P is bearish, but also in correction mode as it went on a wild ride lower today. And we have a key line in the sand at 34.5 that will likely determine who takes control tomorrow. Interesting chart on the S&P. Gold is bullish after the sellers appear to have failed to take control after 3 legs higher today. You don't see that very often. We have a recent break of a falling resistance line. That tells us buyers are looking for a pullback to go back to the highs on gold. And of course the euro. The euro looks like it went around in the tumble cycle a few times today. Euro looks mighty confused this evening after a strong move lower was quickly interrupted by the buyers who are now threatening to reverse the trend tomorrow. And we have a few key areas to watch for proof. It's going to be a little bit of a sit on hands on the euro here tomorrow. We'll get some reasons why. We'll talk about that in a moment. Got a really important newsletter. Big opportunities tomorrow. What we're seeing right now, we get a lot of big ranges to work with going into tomorrow's session. Before we jump into charts and start prepping for tomorrow, I do want to remind you the only place to watch the full-length version of our nightly newsletter is on our trading blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, that's wonderful. Make sure you subscribe to the YouTube channel. Lots of great stuff there. But this is only the snippet. This is only the teaser on the YouTube channel. Follow the link in the description of the YouTube video, and then I'll take you over here to our blog at Sideways Markets. While you're here on the blog, don't forget to grab your free pass. Come out and join me as a guest in our trade room for a few days here this week, next week, whenever you got some free time. Lower left-hand corner, you can register for our mailing list. I need your name, your email address, and then check your inbox, and then I'll send you an email every evening when the newsletter is ready to go. Right below the video tonight, you can download all the charts that you see me using in tonight's video. That way you have those on your computer for tomorrow. And over on the right-hand side, you can learn more about what it means to be a student here at School of Trade by taking our free trial membership. We also have somebody standing by 24/7, 365 to give you guys any answers to your important questions, brokers, data, charts, whatever the question may be. Right, grab our live support on the right-hand side. Ready to rock and roll? Helmets on, seatbelts fastened. I hope you hydrate. You'll get a busy one here for you guys. Don't forget, last newsletter of the week. We do these Monday through Thursday nights. They do let me out of my cage on Friday afternoons. We're getting a big rainstorm here coming in. About to get rain for a week here in Los Angeles, so I will not be at the beach tomorrow afternoon, but I might. We'll see. We'll see how we look. First things first, though. We've got the Friday, April the 8th. No major news on the calendar tomorrow, right? Not much here on the calendar. We do have that. That kind of town hall going on tonight. We get some Fed speakers, right? Greenspan, the Bernanke, right? Yellen, Volcker, they'll all be talking tonight here. Get a town hall. I don't think that's going to bleed into tomorrow, but you know, who knows? Who knows? We may be reading some headlines tomorrow morning of what they said in tonight's town hall. Still don't know if that's going to be televised. I would check out C-SPAN if you want more information on that. Let's see here. No major news on the calendar for tomorrow. All we know is tomorrow's a Friday, and on Fridays it's early in, early out. 11:30 a.m. Eastern Time. Really, 11 a.m. is usually going to be about the cutoff for new positions on Friday. I always tell my students, get to it early, make your money early, because at the end of the morning, well, bottom line, at the end of the week, at the end of the month, at the end of the quarter, at the end of the year, traders take bigger risks. They're either way up on the day or they're way down on the day, and they take bigger risks. They take risks that they would normally not take. Combine that with lower volume, the self-fulfilling prophecy, and you have a recipe for disaster if you're not paying attention. So be careful in the afternoon sessions on Friday, right? Early in, early out tomorrow. And because there's no major news, it's all going to be price action based tomorrow. So we're going to see how some of these levels line up. And don't forget, we will be opening up our live trade room tomorrow morning at 8 a.m. Eastern time to do all of this with you guys and gals. All right, let's jump into crude. We'll go crude, S&P, gold, and we'll follow up with the euro. Crude oil is bearish with a short-term correction this evening, which tells us the bears are likely selling into this move, and the buyers will need to hold the next pullback if they want to keep this price from retesting the lows from yesterday. We have a head fake at the open, 2 channels, and some double ups on the chart this evening. First of all, the head fake at the open was a huge clue this morning in our trade room. Right? It looked like a rotational day, but didn't feel like a rotational day. But this is one of those examples where head fake at the open, pounds lower. This is a huge bearish clue. And this, of course, could be the opposite direction too, right? If it head fakes down and then runs up. Usually when this happens, you're going to get that follow through, right? You're going to get that follow through. Now, obviously, we can't guarantee that, but that's typically right what happens when we have a situation like this, where a head fake and then it just literally traps the buyers. The buyers join the sellers. Right now, we're seeing that correction for good reason. The day was just nothing but bearish, profit taking, bargain hunting, and of course, we assume now that sellers are selling into this move, right? They're scaling into this move right now, knowing that there's going to likely be a pullback, and if that pullback can't hold, right, we're going right back down. If the pullback does hold, though, you'll see sellers with an average position, somewhere right in here, right? They'll look to get out of that trade with only a small bump on the head, right? So the head fake at the open gave us an easy clue this morning. This market was going to be pinned lower today, and it certainly was, all the way down to that double down off the highs. The major bear channel tells us the sellers will be selling into this move as it pushes higher with a target back at the low. I would say as of right now, short-term target, right, 36.69, that low, 36.70. But really, those sellers are gunning for that prior low of day, right? They're going to be gunning for that prior low of day. Looking to take the bulk of the profit off, though, at that low. And then, of course, right, leave a runner for the prior low of day. Short-term channel also has a big overshoot, right? We go into this short-term bull channel. This short-term bull channel, as you can see here, has a double overshoot into a double up. And you'll notice they use that measured move area as support. And in my opinion, that measured move is really going to be the battle line tomorrow. We're due for a pullback. Hold on, back up. We're never due for anything. Sometimes the human in me comes out and I say words like can't, or overbought or oversold or due, right? The market can do whatever it wants. The market will do whatever it wants. We know right now, though, we, of course, as traders, we work in probabilities, right? So we look in long-term probabilities. Although the market can do whatever it wants, with a double overshoot of the high of that channel into a resistance zone overhead, we know we're going to get sellers again. Like I said, with the big bear market looking, right, with that big bear push down, sellers are scaling into this as it's going higher, knowing that they can get an average entry price, right, smack in the middle, right, and then knowing that they're due for a pullback, right. If the pullback holds, then they know they have enough time to get out, right, for only a small loss. But if the pullback fails, right, they're in a great position now to send this price right back to the lows. So ultimately at this point now, buyers want to see a pullback hold. And if I had to guess right now, I would say this measured move support at 37.24, that's going to be the battleground. And it's just like this on the S&P too. So we pull back, right? We may slip below the measured move, find a way back in, but if we can stay above that 37.24, I think these buyers have a shot all the way back up to that high at 38.30, right? You got some resistance areas overhead, obviously, we've marked up here, right, overhead. But again, buyers will be gunning for, right, that high tomorrow if they can hold that pullback. All the sellers in the market, though, they're looking for that next pullback to fail. Right, and if they can get below that measured move and then fend off one more attempt from the buyers, they should have no problem finishing off that seller target down to 36.70 area, right, down to the previous low of day, and then maybe, who knows how far this thing could go, right, possibly a long-term right, measured move. What is more likely tomorrow, though, is to get a more short-term measured move, right? And that is what's more likely. It is a Friday, right? Now, sometimes we get a bloodbath on Fridays. Sometimes the markets just keep going, but we did that today. We had that kind of runaway day today. Lots of profit taking you can assume right now. But again, I look left and I can't discount the fact that this could just be that pullback right to that triangle, right, that we talked about in last night's newsletter, right? Here's that triangle that we talked about in last night's newsletter. So it definitely makes sense to me that this could be, right, this could be nothing more than just a deep pullback, right? And we're going right back up to those highs like we talked about from last night's newsletter. The problem right now, though, is most recent, right? Recency is always the most important, right? Traders have short memories. It's a good quality for a trader to have short memories, much like professional athletes, right? We want to work on the moment right now, stay in the moment right now. And we know right now we have a very strong bearish move down, right? And so if they can't hold that pullback, right, we're expecting this to revisit those lows again tomorrow. If they do hold the pullback, then we know who has control tomorrow. We'll be looking at this market tomorrow morning live in real time. Let's keep going. Now, the S&P, we talked about this earlier this week, how the crude was leading the S&P. I'll tell you, this chart tonight makes me think it's now flip-flopped again, right? It almost feels like this S&P looks a lot, well, let's talk about it. The E-mini S&P is bearish, but also in correction mode, just like the crude oil, as it went on a wild ride lower today. I'll tell you, these markets, it's a day trader's paradise right now. But boy, looking at this, if you're checking your IRA statement, your 401k statement every week right now, that's a scary thing. You're seeing big movements on a weekly basis right now. Again, it's a day trader's market right now, but boy, long-term traders here. It takes a strong stomach right now to watch some of these moves after 2 full days of bullishness. Okay, so we have two spiking channels and a measured move to work with this evening. The major bear spiking channel had a double overshoot during a wild ride lower today and tells us the sellers who missed the lunch session collapse will likely be trying to find a way back to the lows. This is a really good example of a couple different things. First of all, here's your spiking channel down, right? There's that spiking channel down. There's your double overshoot. I mean, what a beautiful buying opportunity if you're willing to take some risk, right? That is a quintessential double overshoot into a double down, beautiful little signal candle. We talk about this stuff all day long in our trade room on intraday charts, right? On much faster time frame charts. These are one of the only reliable reversal opportunities you're going to get, full trend reversal, counter trend trades. You're not going to hear me say that very often, right? There aren't that many reliable counter trend reversal opportunities, right? Because the markets have inertia. A bearish market usually finds a way to keep going lower until the opposite side can prove that they take control, right, and go the opposite direction. Just like we're talking about on crude, right? That holding that pullback. So beautiful double overshoot after a rocket ship lower. That's one important thing to remember here. But also, I think what's really important to recognize right now is look at this move higher, right? Look at this move higher here right now. Of course, opening up here right now at 6 p.m. Eastern time. Sorry, look at this move lower, right? If you put a crosshair on this chart right now, right? You put a crosshair on this chart right now. This happened at 1:30, right? 2:30, 2:45. This move happened today. So this move literally happened over lunch for most traders, right? This move literally happened over lunch. This big move with gaps and huge exhaustion red candles. What that tells me is there were probably a lot of traders out there that didn't even see it, right? They didn't see it. They weren't watching it. They certainly didn't trade it. And that means now they're having a chance now, right, to find their way into that market, right, trying to send this price right back lower. Most important thing right now is that spiking channel, right, into a massive overshoot is going to want to correct right back to the upside. Here we are, though, right back at that measured move again. Next thing is the measured move in the chart, right? The minor spiking channel. This minor spiking channel tells us there's a correction zone down here, and those buyers are going to want to correct it lower and try to go higher here. So this